If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. Good morning, everybody. Happy Friday to you. No, there's not an NFP report. That is our bad. The title was set before they postponed the NFP report. So we do have NFP coming next Wednesday, but today there is no NFP report. However, there is still a ton of market movement to talk about. We've got the NASDAQ rebounding here a little bit from those lows of yesterday. We had a very steep sell-off in a lot of stuff yesterday. You had precious metals getting hit hard. You had Bitcoin getting slammed. Cryptocurrency as a whole got absolutely nailed yesterday. NASDAQ also plunged, but we did get a little bit of a rebound starting today. The question becomes, do we actually get follow through? Yesterday, we did actually have a very solid close below this structure low. So I'm going to go out on a limb here and say, I think you're more likely, could be wrong as always, but I think you're more likely to see NASDAQ and S&P 500 come down here a little further and continue this retest of these lows. Take a look at NASDAQ on the daily time frame. We have support looking left back here from October and December that I think very well could potentially be retested. That could be coming back down into play. Just a quick look at the S&P 500 as well. You did have a solid breakdown yesterday, a little bit of a pretty sharp bounce here today, up 1%. Same thing with cryptocurrency as a whole. If we take a look at Bitcoin, dropped yesterday in the Asian session overnight, almost hit, I guess it did, it hit right around $60,000. And what's insane about this is that it wasn't that far ago that we were looking at $126,000 Bitcoin. We dropped 50% in 125 trading candles. That's crazy. So you are having some serious volatility. Of course, the precious metals continue to be volatile as well. We had the huge drop off in gold, a pretty nice bounce. And of course, yesterday we had more carnage in the silver market. Gold also did get hit, but notice relative strength actually showing up here on gold. Let me show you what I mean by that. So you had the big flush lower in precious metals that everyone knows about. You had the rebound, and then yesterday you had more sell-off in precious metals. But notice how gold is here relative to its prior low. Quick look at silver tells a very different story. We flushed briefly through the same lows that we put back previously. Silver is showing relative weakness, right? So strength for gold, weakness for silver. I do still have a short position open on silver. I have trailed my stop loss on this position, so I no longer can lose money on silver, but I do have a stop in place just above this kind of 1 hour and 4 hour level of resistance that we swung up to 2 days back. Saw some sell pressure come into it, followed through. And now, again, what I'm looking for is for this not to play around too much more. I want this thing to essentially roll through those lows and continue lower. If that happens, I will continue to trail stops. And if it doesn't, if we rebound, then I'll just take a nice little profit on this one and move on to the next opportunity. So that is pretty much where I'm at with silver. I do have a slight bearish lean. We continue to see, as far as I know, last time I checked it, yep, silver getting a -5 score with an edge finder. That is going to be slightly leaning in favor of the bears. What we have here is technical scoring showing some weakness on the 4-hour daily chart trend and the seasonality for the month of February. A little soft here currently for precious metals, specifically silver. Fundamentals also looking a little troublesome with strong economic growth data coming in here out of the US this week. We had strong PMIs. Retail sales also have come in strong. Consumer confidence a little bit soft. That's going to be helpful to gold and silver. But then when we look at inflation, we had a higher than expected producer price index number. 2-year yield remains elevated here. And then if we take a look at jobs market data, this is where you get a more bull case for precious metals. The jobs market showing weakness across the board here. This week we had JOLTS job openings really, really weak. Really weak, by the way. 6.54 million job openings. The job openings continue to plummet lower. ADP came in lower than expected. The weekly jobless claims came in weaker than expected. The jobs market is showing some signs of weakness. There is no question on that front. That's bullish for precious metals. But then again, we have kind of a mixed bag here. Growth out of the US, strong. Jobs market, weak. Inflation showing a bearish tilt and kind of putting us over to the more slightly bearish side. Of course, next week we have CPI and NFP. Next week is a monster week, guys. So understand that we could potentially have some volatility. Hey, I wanted to show you this really quick, and then we'll bring in Chris Pulver to the conversation. He's waiting in the background here. We'll get him set up. Check this out. So yesterday, someone commented, they were like, Nick, I really thought you were posting all the Telegram videos, and I thought you were doing all the video edits. And it just made me laugh because we have a lot of great people involved in what goes on here. And you guys must think I'm like Superman here. If I'm doing all the trading, building Edge Finder, streaming, editing all the video, we've got a great team of people. Just shout out to the team. We've got happy Friday to everyone. Hope you guys have a great weekend ahead. And, behind the scenes, there is a wonderful crew of people that make all of this possible. And it is definitely not just me. I like to joke sometimes and just say I'm the pretty face at the front. So, in all seriousness, we'll bring in Chris Pulver to the conversation, see what he's got for us in terms of ideas here. Again, NASDAQ, S&P, little bit of strength coming into the picture here. We'll see if that can follow through. Gold, silver, also really solid here for now on this front. So anyways, copper, natural gas, oil, and look at Bitcoin up 7% here today. Of course, that is kind of crawling back from those lows, but we'll see where that brings us. Okay, if Chris is ready, we can bring him in, see what he has to say on this. Hold on, let me just see, make sure. Okay, yeah. But yes, huge downside slide for for crypto for now. But the rebound has been impressive.
Good morning. Happy Friday.
How are you doing?
Good. It's been a battle type week. Tuesday was a bit of a difficult day with inefficiencies, and yesterday was fine. Like it was fine. It's just one of those weeks where I'm just kind of bracing for things to get worse. Not that they necessarily will, but just kind of bracing for it. The VIX has been probably the one thing I'm watching the closest is we've seen the higher VIX, and it's just been this like slow grind to 23. I have sold some premium, but obviously when we get into the 20s, that vol suppression kind of goes away. So I think today in the close is going to be really important to see, are we making a higher VIX move? Are we actually going to sustain? Oops, let me go back to VIX here. Are we going to sustain some type of comeback and maybe keep some support intact?
Chris, let me make a case for something. I want to get your thoughts on it.
Okay.
I was talking to a friend of mine who also, trades, invests, watch the market. He's not a content creator, but he's, pretty knowledgeable about the markets. We were talking about how the last few years you've had this very, very impressive ability for the market to V bottom very aggressively. And I was making the case for why, not to sound overly alarmist or bearish, but I think that there's a potential situation in which we don't get the V-shaped type move right away. And this was kind of my case for this, is when we saw this back in April, we knew there was a very unique situation that actually resembled COVID in some ways, which was there was some self-induced pain, right? We know that the Trump administration was threatening tariffs left, right, and center, and also doesn't want the stock market to come down. So I felt pretty good. I was early to the idea, but I felt pretty good about getting in there and buying some stuff because I was like, I don't think that the Trump administration's, whether you want to chalk it up as they're not going to let their ego get hit, or, in a positive way, you could say they don't want the stock market to get hit. It is hurtful to, 401ks. It's hurtful to, so whatever reason you want to attribute to it. I said, basically, I don't think that they're going to keep doing the pain trade. I think that what they can give in terms of pain, they can also alleviate and take away.
Right.
And so that's what they did. And it ended up being one of my, better calls. COVID was sort of similar, where you had a decent background in terms of an economy and just a flush where we know that they're going to pull whatever levers they can. Of course, this is hindsight speaking. I get that. But what I'm trying to make the case for is that this time around, the sell-off, if we do see something broader taking place, my opinion would be that it would not necessarily be something that is so, you can't just take it away, right? If there's concerns about AI, disrupting and eating away at some of the other prominent business models within the S&P 500, if there is tactically higher interest rates, both domestically and abroad, if there's a labor market that is in the slumps, these are not things that we can just pull a lever and fix right away.
Right.
So I'm not a bear in the sense that I'm not saying like, oh, short the market, it's going down, down, down. I'm saying that if it goes down, I would actually be pretty surprised if it was a snapback reaction, because those sort of catalysts, those sort of concoction of bearishness makes me a little bit more, okay, those are structural things that we're going to need to grind through and figure out.
Yeah, I agree. I think that what I don't love is this early in February, actually, seeing the market decline during earnings, which for the most part have beat consensus.
Let's
so
talk about
typically,
Amazon. Yeah.
Yeah, I mean, typically, if you see a February slide, it's usually like later in the month. It's like the 20th onwards, kind of the later half of February, and then maybe March, April continues that weakness window. But when we start, I mean, what's funny is I just finished up my tear sheet for some clients, and last year, like November was flat for me, December was flat for me, January was mostly, it was like up, and then it's flat. So like, it's been 3-4 months of like, well, what I'm doing is I'm selling a bunch of premium, time's on my side, so I'll end up generating some profits. But it's like I'm still figuring out what I want to do with all my cash and deploy it. So taking a look at the technicals, I mean, we're up today. I mean, futures up 0.55. I mean, my chart is hopefully pretty straightforward, where if we get back into if the green candle today can kind of get back into this zone, that's respectable. But taking out this level, or at least breaching that level, to me, this looks like this thing could be rolling over on the right side of this rising wedge. Any type of rally here, more than likely, I would think for the second half of February still has downside pressure. That would be probably my higher probability for the end of the month, is that we continue to put a lot of pressure on this market. Even if it's down here, it's only about a 7% correction if we pull back to that level. If we go a little bit deeper, now we're talking double digits. But I mean, I think there has to be a positive story to grab onto for the market to kind of renew that just risk appetite. I mean, Bitcoin down 50%, gold and silver has been shaken out. Oil prices are off the $55 lows. Earnings is done. I mean, the only thing we have maybe to bring the market back up is we have buybacks coming. And so if they just come in heavy, but I mean, now I'm starting to see that people are questioning the timing of these IPOs for 2026, which in the stock market is usually a huge deal. It's like when things are great, IPOs are like, I mean, this is a big one. If you're talking SpaceX IPO, Anthropic IPO, OpenAI IPOs, those are huge companies that are valued in the billions already. And those are already starting to be questioned. It's like, well, here we go. I mean, it's just like, there's no optimism right now. It seems like in the market's decline of 3%, optimism is gone, which is kind of crazy.
Yeah. Well, and under the hood, it's so fascinating that you're getting this move not accompanied with a bigger drawdown in the S&P 500.
True.
But I think that kind of shows maybe the optimistic or bull case is that you're having a rotation rather than an outright everything getting sold.
Right.
Maybe that's where you could kind of hang your hat and be like, hey, that's kind of a positive note, because really it's scrutiny around the software, the AI, all the disruption that could cause. And people, of course, if we want to talk Amazon for just a second, Amazon and Google and Microsoft, all of them reiterating that they have massive plans to spend big money. And
Mhm.
the market is looking at and saying, okay, that's a problem for us because we want ROI. You know, you're talking about like, look at like Oracle has been torched for going out into the debt market to try and essentially borrow money to continue to fund their investment into AI stuff. And so the market, what used to be, hey, it's okay that you're investing big money, and that's actually even perceived as a positive thing because they think there's an ROI coming. Now you're seeing the market punish huge expected AI spend. And you know, I love these companies in terms of like the Mag 7, but I do have to say that maybe one of the more, you know, challenging realities for these companies is that for a long time, they've had just rock star massive profit margins. And if there is this requirement for them to pour money into investment, that takes away from free cash flow, takes away from their profit margins, and it does add a layer of risk that may have not been there before. Because what if this, you know, doesn't pay off as big as that they are hoping and, you know, going all in on? You're essentially taking on more risk with these companies than perhaps you previously were.
Right.
You know, so you have Amazon here this morning down 8%. Amazon overall, just taking a quick look here, they did miss very slightly on their earnings. And in this type of market, you cannot do that. The market punishes you so bad if you have even decent numbers. But if you have bad numbers or missing numbers, it's rough out there. So Amazon got hit. If we take a look at just around some of the Mag 7 while we're on the topic, Microsoft has been hit here recently. Even Google, amazing in terms of numbers, et cetera, but reiterating more spend expected. And so market has kind of not really punished Google. It's held up pretty well. But yeah, just something to think about is take a look at the Mag 7 as a collective group, as I know you often do, Chris, and you can see we're sitting at that support level you talked about the other day, and we'll see how things play out here. If you start to lose that, though, if this momentum is really shifting into like take a look at consumer staples, man. Consumer staples are, you know, banging the drum here to the upside. And so I think there's some warning signs going on right now.
Yeah, I agree. I mean, consumer staples is pretty straightforward. That was just the worst sector last year. So you're getting a
Nice
big push into that
yeah.
just because it was, you know, it was cheap. But what is not leading the way this year is information technology. So that is made up of primarily your biggest weight is going to be NVIDIA, Apple, Microsoft, Broadcom, Cisco, AMD, Palantir, IBM. Like, I mean, those have been some names that just been, you know, NVIDIA's down to 175. Apple's up a little bit. Microsoft way down. Amazon looking a little bit like Microsoft as far as like the gap lower. You know, Meta was up aggressively, but faded most of that earnings gap. Broadcom down, making some fresh lows or testing some support levels. Micron was a high flyer. I still think Micron's fine. AMD probably the same thing, but you got to be bracing for steeper drawdowns in those. I mean, those companies are certainly experiencing a lot more volatility. So mags wise, I mean, taking the April low from last year, I mean, Fibonacci wise, I mean, even if we pull back to, I'm not saying this is going to be fun. I mean, if the mags pulls back to 38% fibs, which is around 57.70, the market's going to feel it. I mean, the market will feel another, let's say that happens. I mean, we could still shop around here in this channel, but if the market drops another, you know, 7% in mags with that market cap, I mean, I think that's 7% we could probably see taken out of the S&P as well, you know, if it's across the board. So it's been an interesting separator, right? I mean, Apple at least having some positive traction, Amazon after earnings down and gapping, you know, quite a bit lower. So we are looking at Amazon 8.67% pre-market. Broadcom still sliding lower. Google, I had a nice trade on Google this week. It was a calendar spread.
Oh,
that
nice.
I needed to stick around like 340, and I think my break even was like 305. So that we had this huge rip yesterday that gave me it was like 108% winner. So I was pretty happy with that one, considering it was, you know, down pre-market quite a bit. You know, gapped way lower, but filled that. So I'm glad I dumped that position yesterday. Meta, like I said, faded that gap very quickly after having a big beat. Microsoft down and down. I want to sell some puts on Microsoft, but like I said, I'm not sure, man. I mean, why is it that the markets are hating on Microsoft right now? Or if I get a chance, I mean, I guess I'd go way back here. I know this is insanely out of the way, but if I'm like, yep, you know, Microsoft at $220, maybe I'll take a stab at it. I mean, I think it's a huge company. that's about the only spot that I would say right now. I feel like safely I would sell some premium at like the 220 handle. Maybe I could own Microsoft at 200. I'd be fine about that. I mean, we're looking at Microsoft. Big picture. I mean, Snowflake is rock solid, and 24 times earnings, which from a Mag 7, I mean, that was like a 33 times earnings. This come down quite a bit in earnings compression. And then fair value is like 450. So if I put in a position to own it at 200, at least we got some good upside to it. And I might never be assigned it either. So we'll see if I go out, 12 months, maybe do like a leap and go out to next January, almost a leap, see what I can get for. I'm going to put that in there. So 222 on Microsoft. I'm going to see what that looks like today for the alerts.
Yeah, and just pulling up on my side here, I was just pulling it up on Microsoft. Microsoft looking pretty green across all of our screens here within Stock Box. All this does is it looks at the 3-year average for the collection of financials that you see on the left here. Microsoft get a pretty solid reading. You've got earnings growth, revenue growth, solid PE ratio, forward PE ratio. The financials to me would be kind of a green light, quite literally. So, it's one of those stocks where I think that it's getting hit hard alongside all the software names, of course, as being probably the biggest or of one of the biggest possible software names that you can have. And so it's taking a lot of the heat alongside the software world. But I do think that Microsoft has such a powerful ecosystem. And that's kind of where, that was another thing. I had a conversation yesterday with my friend who's into investing as well. We're talking about on the software side, maybe finding the names that have, very resilient customer bases, ecosystems that they already control and own. And so Microsoft is top of the list on that front, right? You have a really solid, company there. Also, yes, we do not have NFP data today. We've discussed that a couple times here on the stream, but just to reiterate for people who are coming in late, NFP has been postponed until next Wednesday due to the partial shutdown that took place last week. So just covering markets here and things that are moving. Everything is very volatile out there here today. We are seeing a bounce. Chris, I'll go out on a limb. I think, and I could be wrong, of course, as always, not financial advice, but I think you're more likely to see this stuff get faded today than to see a follow-through rebound on some of the risk assets. This looks to me, at least for now, it looks like a kind of short-term oversold technical bounce that we're seeing on things like Bitcoin, which got absolutely crushed yesterday, NASDAQ, et cetera. And I still think that NAS and S&P 500 probably want to retest these lows around that November and October low point that we saw. That's my personal take on it. I think that they're in longer term choppy ranges and that we could retest a little bit lower.
Yeah, I agree. In fact, that's probably my plan for the day is, if we're going to gap up about 0.5%, we can still finish the week. I mean, we also came in with a, gap lower yesterday. For the most part, the market was only down about 20 points yesterday, but most of the damage was done, pre-market with all the futures dropping. So the market, gapped lower about 0.8%, finished about 1.2 lower, but it's only about 20 points. So push up today, if we come back to try to test like 68.50, let's go up about 0.5.
Chris, I might need to hop out. I'm sorry. I got this guy
coming in.
You keep going.
Yeah, no worries. So what I'm looking at for today's kind of day trading is I'm probably going to look at some type of zero DTE. If I can get a decent enough premium to sell, I might look at some bear call spreads, broken wing butterflies this morning, and I'll just do a measured move. So I mean, if we're up 0.5% or so, just keep this in mind if you're watching some short-term trading in SPX. SPX needs to get above 68.60 to resume some positive gamma flows. What that means is that's where you start to see that the markets are giving us order flows like people are selling puts, which basically creates some support in the markets. And everyone is like selling puts and selling calls. So it kind of creates like this, slow grind where the markets are stable on the downside and they're looking to climb slow to the upside. But that's above 68.60. So if we're not there, I think that this rally, if there is anyone, it's just really to test this level. And I would like to say like, okay, let's make sure we're kind of selling premium high enough and out of the way that the market would have to make like an outsized move for this to be a recovery on the day. So I think my plan today is to look to fade this move. Obviously watching the VIX, I mean, it's retreated from 23 down to 20, but it could just as easily, kind of maintain this trend where the VIX is here and it starts to go back up again. And I don't know. I mean, I don't know if this is an enjoyable VIX because it's like, well, at least it's not spiking up to 40, or if this is like the VIX that's about to, break those vol suppression funds, which is we're higher, we're higher, we're higher. I mean, if this just climbs up again, I mean, once we're in the mid 20s, like there's no vol suppression. Vol suppression kind of stalls at 20, stops at 20. Anything above that, that's where the VIX can get really wild. And all of a sudden we see a spike up to 30, 35, 40. I am watching I've got synthetic longs on VIX. I'd like to see it. I mean, well, for that trade, I'd like to see a decent spike up. Otherwise, I want to see if the VIX will actually come back down into the teens. If we get to 19, 18, 17, of course, then, things are obviously looking better for recovery. But like I said, I'm kind of bracing mentally for a bit more downside. I think I'd be pleasantly surprised if we all of a sudden come back to hit new highs. But with earnings season underway and really Mag 7 out of the way, the only earnings that really is left is NVIDIA. And NVIDIA, I believe, is at the end of the month. So we're not necessarily going to see, the market like holding up and hanging on to resiliency for another 20 some days. This is the 25th of February, which is that last week. I mean, Friday is the 27th, the final trading day of February. I don't think the market's going to sit here and like cling to this support and just wait on NVIDIA earnings. I think the market is likely going to have some more downside pressure. So this deleveraging theme will continue. And you have to remember, like, unfortunately, the market is full of over leveraged positions. The market is full of greed. And a lot of times that when it gets extreme, the market has to find ways to flush that out. It is insane that the market's only down about 3%, and it feels awful, right? I mean, I think the reason why is because some great performing names, some of the biggest winners of last year, are quickly down 30, 40, 50%. So I think that's why it feels way worse than it is. But fortunately, I mean, index wise, I'm only down a couple percent. I'm like flat for the year, which is annoying because I never want to be flat or down. But I just don't think I'm going to be terribly surprised to see this market come back and retest, the October, November lows. I do have my bigger concerns that when we head into, let's just say hypothetically that this is what happens, right? So we have the market, breaking some lows, poking some lows. I know today's a bit of a comeback rally, but if it's short-lived and it's a fade, then we start to, fade this area. Market doesn't make all-time highs. And then what happens? Well, we work our way down again, down our way. I mean, if this is like an orderly correction, okay, fine. But if we test these levels after making a slightly higher high and we work our way back down to these levels again, I think you can use your imagination with me. Let's put our Bob Ross analysis on here. If this sets up for some type of head and shoulders pattern, right? Could this market for the entire setup of 2026 just be giving us a monster head and shoulders pattern? And until this is done at maybe a 6,000 measurement, maybe that's how we can get back to these highs again, right? So I don't know. I just think that it's very difficult to have a really optimistic outlook right now unless something changes aggressively, where we have to really clear 7,000 and show some momentum. But right now, this doesn't seem to be the case. So, like I said, just be prepared for a little bit more downside. Today, I'm actually going to be looking at some hedges because I want to make it cheap. I want to make it asymmetrical. So if I can get something where, let's say the next 30 to 60 days, if we are in this window, could I find a trade that pays me, 5 to 1? If I'm in this window, could I find a trade that pays me 5 to 1 or 10 to 1? I wouldn't mind taking some stabs at the market like that. And it's not going to cost me a ton. This might be, $250 to $500 risk, but if it pays me, $2,500 or $5,000, that's at least worth having some of the offset. And if I'm wrong, like I'll throw that away, and then the whole portfolio, gets a nudge to the upside. So it's one of those trades where if we're right, it pays well. If we're wrong, it's a throwaway trade, and the market overall stabilizes. But again, rising wedge. If we're breaking structure, fade. Once we test this level, to me, this looks like a potential topping pattern. And if that is a topping pattern, well, measure it out. And we're probably going 6,000, maybe lower. Again, that's not a good picture. And I don't like to forecast like, yep, this is what's going to happen. But it just seems like right now with even reasonably good earnings, the market doesn't care. And the market is clearly like pushing things lower. And, it's a bit of an earnings compression. We'll see. We'll see if like Q1 earnings that we'll see next quarter, if they are revised lower and it's a kind of a low bar to actually hit. But like I said, NVIDIA is not going to save us. It's 20 days out. NVIDIA is not going to be enough to have this market cling to this area and be like, well, what's NVIDIA going to do? Because we still have non-farm next week. Like Nick said, we still have CPI and PPI. We'll still have those US data points. The labor market looks terrible right now from a data point. I think that's also a reason that they're trying to suppress all that data. Is like, the labor market's just not looking good at all. So sentiment's bad, labor market's bad. It's tough to be super optimistic at all-time highs when things are looking fragile underneath.
Chris, I'm back. Thanks for that.
That was quick.
Yeah, all we had is a guy come into our office to check the fire extinguisher. I just had to open the door for him.
Hey, there you go.
Yeah. So, anyways, I had another thought. I'm still kind of thinking that precious metals also seeing this rebound, that the follow through here to the downside, at least in the short run, seems promising to the bear case for now in the short run on precious metals. For me, I've got this silver stop loss. I was also talking about this, Chris, recently or this morning. Look at the relative underperformance to silver here recently, where you have seen the big drop off in gold, and then potentially we'll see if this starts to break out, then I'll take profits on my silver trade, for example. If silver and gold start to rally higher. For the bulls out there watching gold, this is the pattern I think you probably want to see. Is you want to see higher low come in here and break through structure to the upside. But look at silver in comparison, right? So, higher low potential trying to form on gold. Meanwhile, a lower low solidly printing here on silver. So you have some relative weakness for silver. I think that is perfectly logical when we think about like how much further silver was in terms of its moving average, so stretched. And so now I think that you're, as I've said a couple times, I wouldn't be surprised if silver and gold kind of run the stack back and retest some of these moving averages. I think that's long-term a pretty healthy thing.
I do too. And I think it's a great position to have. I think anybody in gold and silver right now, it's like, it's okay to take some stabs. It's certainly it feels a lot better to, participate in gold and silver now, even though it's a little rocky, a little shaky, but it's like participating now feels a lot better than when it was up 4% a day, and blasting off from like, I couldn't believe that I was going to talk myself into buying like near the highs. But like I said, it was good timing for the granny indicator to be like, what about silver? Right. I'm like, oh boy, this is the top. And then literally 24 hours later, it was a huge shakeout. On that gold pattern you're talking about, Nick, I do think a couple things. So we have a pretty decent impulsive flush to the downside. If this goes low, high, higher, low, higher, high, this could be a nice little harmonic pattern. Mm-hmm. And another spot to fade where we don't take out the highs again, and this fades all the way back down. I think we fade back down here. I still think we have some symmetry. I'm still going after on the daily chart that 200-day moving average. So as far as me kind of being satisfied where the gold pullback can be over, I think it's got to be the 200-day. It's got to be the 200-day. So whether we, poke highs again, I still think this is a fake out, hit the damn 200 EMA, and then I'm way more convinced like, okay, I'm going to build a position now in gold. And silver, kind of goes hand in hand with more volatility.
Yeah, no, I agree with that. And I think that there's also a little bit of a strong dollar phenomenon going on here. The rebound here, the sharp jump from the lows here following the announcement of the new Fed chair in combination with, and it's very weird, you have this very opposite extremes dynamic where you have a really weak labor market data print and at the same time, very strong growth metrics coming in for the U.S. economy. It's a very strange, feels like gaslighting type of environment because people are not getting jobs, but at the same time, the efficiency, the strength, like we saw that manufacturing PMIs number jump dramatically up to 52.6. That's like the first above 50 read that we've had in a while.
Right.
Much higher than forecast. Services PMI also beat expectations. So you have this kind of collection of data that says, hey, this is dollar bullish. Inflation is also, we had a higher than anticipated producer price index. The 2-year yield has remained steady here, trending higher. Maybe actually took a little heat yesterday, but for the most part, you also have the jobs market showing the opposite indicator. So fundamentals here look a little bit mixed. I do also pay attention to what COT flow is looking like, and we do see commitment of traders recently showing some increased buying in the US dollar contract. So I'm really curious to see how all this plays out. for the US dollar. Could we have just tapped a low here for the time being? Very possible. That sort of sharp reaction to me signals, you could have another kind of run like this, and maybe all the way back up to 99.5 or 100 on the dollar index. I wouldn't be surprised. You have some factors shifting here. And, also just a quick look at yields as well. 10-year yield just slightly higher today, 2-year yield higher as well. And last chart that I want to look at here, let me see if I go macro screeners, risk on, risk off. This is credit spreads tracker. This is kind of a cool little indicator. This is simply just taking HYG versus TLT. It's showing it over time. It's looking at high yield, corporate bonds versus TLT, your treasuries. And we can see what was sort of a rising chart has kind of gone a sideways, and we'll see if it starts to threaten moving lower here. If credit spreads start to move lower, we've kind of added the little acronyms here to show you that trending down means more of a risk off and spreads widening on credit. So nothing blowing out here, but watch this, because if you do see this shoot lower, that's where I think you probably see less of a rotation trade and more of just a sell everything type of trade.
Agree. And then JNK is another one too. It's like things are still somewhat tight. We haven't had like a blowout in JNK with high yield bonds.
Yeah.
So, I mean, for that point, I think there's still liquidity. Couple things, just XLF for financials, decent pullback. I think as long as the XLF stays above this 200-day moving average, it's pretty decent. There's been an interesting kind of fight back from the banks. I mean, here's JPM, but sitting at these highs, are we going to see this again hold the 200-day moving average or break below? Look at JPM versus Goldman Sachs. Goldman Sachs starting to break down a little bit from the highs, just shy of 1,000. Is there room for this to slide into 800 plus to the downside? So I think XLF and it's kind of the big ones here, JP Morgan, Goldman Sachs, are they going to hold above the 200-day moving average? Clearly there's some type of exposure the markets aren't loving on financials. Going into this year, it's like everyone thought financials would actually benefit from, maybe more AI efficiency and basically a government backstop that's like, well, they'll deregulate and they'll allow better treatment of assets, and they don't have to have the duration and bond portfolios like we saw back in 2023 with those regional banks. And I mean, to my knowledge, that's the case, but it wasn't exciting to see a pretty decent drop on JPM to kick things off this year. And this is a huge bank. You don't want to see the biggest banks in the world like breaking structure. You look at Bank of America, okay, like down and back up. Look at Wells Fargo, down and back up. So either we have to probably regain highs to kind of reinstate positive flows in financials, which again is just kind of another added liquidity metric to the markets. Real quick, I mean, you stepped away for a second there, Nick. I mean, basically right now, do you think that we are heading lower in the indexes? You talked about that October, November low. Do you think this is just a time to kind of expect more pain, fade? I'm just preparing for more downside, not to necessarily trade it aggressively, but make sure okay, if this VIX is going to spike to 30 or 35 or 40, that's a better time to sell premium. That's a better time to look. And even though it's down 3%, it feels way worse than it is. It for some reason, it feels way worse. So knowing that it could be a 7 to 10% correction, it could get way worse. And 10% might feel a lot shittier this year than even 20% correction we saw last year with the V bottom.
I think if it's going to be 10%, given what we've seen so far, like a continuation of what we've seen so far, absolutely. Because most people's portfolios have tech stocks in them. So
correct.
If tech stocks are getting, nailed, to answer your question, the answer is yes for me. Do I think that, the indices are in the process of rolling over and selling off for a little while? The answer is yes. Is that a dip that I'm buying? The answer would be also yes. So I guess it's sort of it's not outright overtly, ultra bearish perspective. I'm not looking to short this market aggressively. But yeah, I do think that it is completely healthy and normal for this market, like the others that have been correcting here recently, to see some flushes lower and to kind of reset some of this rally. I think you have a concoction of reasons to be a little bit cautious about this market. And maybe one of the easiest ones is that this market is not all that cautious just yet in terms of a sentiment basis. So if we take a look at our sentiment survey, what we can see here is it is showing some signs of shifting, but we still have a lot of bulls in the room. Chris, you and I talked about
Right.
this when it was at this high point. The risk reward starts to look a little less attractive when you have people very bullish on markets here recently. As early as mid January, you had crowd sentiment pretty optimistic on the outlook of the stock market. So to me, that tells me you could have a very healthy reset of sentiment expectations. Expectations of AI being pulled down a little bit, perfectly healthy. I think AI is a game changer. I think it's a massive, beneficiary for the average company in America eventually. But in
Hmm.
the short run, people's expectations are very high. And as you mentioned earlier, I think it was a good point. The way corporate earnings are being perceived, pretty much everything is getting slashed no matter what you say.
Yeah.
That tells me the sentiment of this market is hard to please. And that tells me let's see that market pull back a little bit, at which point I think the risk reward starts to be a little bit more attractive to step in and buy. So for me to get short, for me to take some stabs on the short side, which is a very rare thing for me,
Hmm.
it'd probably be breaking all these moving averages. Like if we've talked about that, I think we did yesterday, this idea of like if you start to flood through some of your longer term major areas, take a look at your weekly time frame. If you start coming back to major areas where we very likely should see strong buying, if you break through those April lows, you start seeing those types of dynamics. Now, long term, I'll buy that dip, but short term, I'd be actually looking for some more short sided trades, trying to take a little bit of off the top in terms of selling into that move on the rebounds. But very rare for me to actually short the market. Not something that I usually like to do, and would require very strong readings within my screeners within Edgefinder personally.
Sure. April lows. I said this. I mean, this is going to be a lot of my kind of trade ideas for 2026. I'm actually going to look. So I did sell a SPY put yesterday. It was a 500 by 470. So if anybody's not sure what that is I did a ratio spread. So I bought the 500 put. Let me go SPY here. My charts are messy, I know. I bought the 500 put, and then I sold a 470 put with 2 contracts. So what that gives me is essentially a trade that if price is sideways, I just collect the $500. If price is up, I just collect the $500. If price is down, price can fall 37% from the all-time highs before I'd have any risk of assignment. And if I want to take assignment, which I don't mind, I never mind owning like 100 shares of the SPY at any given time. If I'm going to load up, then sure, I'll load up when I feel like this is a bottom. But I'd rather trade options and I'd rather trade synthetic options. So if we like here, I mean, I bought a call, sold a put, did a synthetic option that cost me like $2, and it was basically running like you own stocks for like $3,000 versus tying up 48 grand. So there's all sorts of ways to generate good income on options when you want to be long. But this is like I'm selling premium. I'd own it at 37%. Could it be worse? Sure. I mean, the market, if we have a great financial crisis type pullback, we're talking a 50% correction, give or take 56%, right? So I'm just putting like starting points at the April 25 lows. And I know that is insanely low. I know that's a long ways away. I don't think we're necessarily going to get there, but I don't want to be playing with fire either. It's like if we're about to see, like 2022 felt terrible for 10 months. 2026, if we have that type of deleveraging vibe, it could feel a whole lot worse. You could have another, you look at stocks across the board, you can see individual stocks that were high flyers down 60, 70, 80%. Those are tough to pick up and say, like, I love this company. I mean, Mag 7 maybe, but Nick, are we about to see maybe, let's look out 5 or 10 years. Do we still have hyperscalers and Mag 7 like a thing? Or is it so much disruption that's coming that it's like nobody wins? AI, like maybe nobody wins. It's going to be so freaking hard to have like a long-term stock pick that maybe it's just like you got to grind the indexes, man. Just, I don't know. That's just my thoughts.
Yeah, no, I think it's we've talked about that before in terms of like really long-term stuff. I do typically lean more into liking themes and industry specific ETFs. I like that quite a bit. I've talked about like cybersecurity and medical devices. I think that I can't necessarily tell you which, like I'm not an expert on which medical device company is going to have the most groundbreaking thing. We can't be experts at everything. So,
Right.
but generally speaking, I think that is an area that hey, it's a little bit dystopian, but the idea of like perhaps replacing some of the surgery stuff with bots that or robotic systems that can help further in that. Of course, you still need surgeons that are going to be in the room, present, or administering these things or designing these things. But that's something where I think it can be disruptable, and I think that maybe being it's a crazy concept, but being more on the side of the disruptor rather than the disrupted, is probably where you kind of want to stay thematically for me personally. So, and then there's some stuff, Chris. It's like, well, if you want to pick something, do you pick something that is incredibly hard to disrupt? Like, for example, a Walmart, right? A Walmart is just, it's hard to beat. Walmart has been relevant for so long. Of course, it had this huge period of time where it made, no returns for investors for a very long time. But, now you see kind of this AI story has shaken direction so many times where we've all of a sudden gone into value where, AI is going to disrupt everything. So now get back into the stuff that's, more value centric and never going to go away. And it's taking turns all the time. It's very volatile. It's very difficult to predict. And the narrative one day can turn completely the other the next day. So very challenging stuff. There's a lot of speculation. And to me, it's like you probably just want to try and find good, solid companies that are hopefully going to innovate alongside AI rather than try to, chase the current hype in the moment. So for me, that means, as I watch this IGV, I'll be candid. I do hope that this market continues to roll over because I kind of want to load up on some names that I think will stand the test of time. I'll throw one out there. This is, it has risk baked into it, TurboTax. Yeah, it's getting hit hard because people are like, hey, I can get ChatGPT to do my taxes. There's a powerful force though to saying, hey, TurboTax like has some like guarantees built in. They stay up to date on all the tax codes for you. They prompt you step by step. They know the right questions to ask you, so you don't have to ask ChatGPT. There's something there that I think, they have a universe of people. They have a household name with TurboTax. Like that's to me something where, yeah, this thing's a falling knife, but maybe I can start scaling into some individual names with, small size and take a stab at potentially trying to grab some action here. So anyways, that's my thought on it. Chris, we're out of time here. We got to throw over the show to our next host. Thanks for coming on as always. And for stepping in when I had to step out of the room.
Of course, man.
All right.
The fire extinguisher is good.
Yes, it's working fine. That's the good news. All right, guys. Yeah. See you, Chris. Thanks for coming on, man. All right, guys. Up next, we have Tiger Barry taking over the stream for a little bit. Of course, talking his trading setups and ideas that he is watching currently in this market. I didn't mention it earlier, but if you guys are interested in getting access to the trade alerts shared by myself and Chris Pulver, currently our VIP discounts are currently 40% off. We're doing a huge discount right now on VIP memberships. So if you are interested in getting access to the trade alerts being shared by me, by Marco, by Chris Pulver, etc., speak with a member of our support team here. We've just dropped a link in the live stream chat to where you can speak directly to our team about setting up a membership within our group. We'd love to have you in there. We have an active chat room. It is the spot to be. If you see yourself doing this 5, 10, 15, 20 years, come join the conversation. We've had people in the Discord for years at this point who have, sat in there discussing, watching markets, learning together. It is really quite the high quality spot to be in. So I invite you to come join us over there. Use that link. Let them know you saw the stream and get 40% off. Up next, Tiger Barry. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
What's going on, ladies and gents? Am I up and running? Let me double check here. 1 second. Am I up? Am I up? Let me see. I don't see myself. What is going on?
Tiger, you're live. Can you share your screen?
Oh, yeah. I thought I was shared. 1 second. Where's my face? I am on and running. Oh, okay. Sorry about that, guys. Rookie mistake. I didn't see my face over here on the other stream, so I see it now. But welcome to Friday, TGIF. How are you guys doing? Let me know if you guys have any tickers or anything you'd like to check out. I just thought I would kind of go through a little bit of a quick review of my week, guys. I started off on Sunday getting into that Aussie US dollar long position. I knew that we did have the possibility of the rate increase, which we did for the Aussie dollar, the 25-point increase. So I was kind of banking that trade off of Aussie strength. US dollar kind of had some reports go against it this week, but it seemed to have been kind of catching a little bit of a bid overall. I mean, if we take a look at the Dixie over the last few days, it's just been up, right? And it's really not too big of a surprise considering the fact that we did kind of drop into this daily demand zone at one point, which is still inside of this weekly demand zone, which we've kind of touched several times in the past, but got a little deeper into this daily zone, and it just seemed to have caught a bid. So, as far as the dollar goes itself, I could definitely see it continuing to go up at least to the major, the next major supply, which would be up here and maybe even something in this area as well. But when it came to that Aussie dollar long, it was giving me a nice bullish score of, I think, a 9 on Sunday when I was started looking at it. But over the course of the week, it's kind of interesting. A lot of these Aussie and New Zealand pairs kind of dropped in score. A lot of these currencies kind of reverted back to the mean, if you will, or closer towards neutral. So anyway, I got in this trade right here off this demand zone bounce. Okay, this is the one that I went over briefly the other day. But I also knew that I had a couple supply zones up here I have to worry about if and when they get up there. So as the trade goes along, we created this little bit of a double top action here. So like I mentioned, I think on Tuesday when I was on, I was going to fill in the clear if we could break and close above that, in which case we finally did right here. Okay, this is a 1 hour chart, by the way, 1 hour time frame. But that candle there finally closed above. So at that point, I feel pretty decent about this score, about this trade, as far as, hey, at least I can move it to break even at some point and take away the risk. So then we had the Aussie 25 basis point increase, and that's where we got that nice green candle there, okay? That candle formed. I felt pretty good, so I went ahead and moved my stop loss to break even. In fact, I think I ended up moving it under this point here, this little swing low, okay? Trailing stops, which is what I like to do. And then, of course, the next step is, well, what's going to happen if and when we run into the supply zone, okay? And there we go. Now, I wasn't as banking on this supply zone here as much as I was this one over here. This one over here broke some structures. This one over here had some nice volume, okay? Some nice volume spread analysis. Expanded range candles. I don't have VSA on this particular chart, but I do on my trading views. So anyway, I was more so banking for a bounce off that, but it just so happened we got to bounce off of the closest zone. So from here, I still felt pretty good about it because in the wake of the Australia 25-point hike, we left this new demand zone here. So I ended up trailing my stop loss one last time right here, and that was my line in the sand, thinking that if we come back to this zone, then that should be able to hold and push back up. Now, ordinarily, I probably would have moved my stop loss, my trailing stop up under this wick right here, to lock in about a 1.5 to, well, it'd be more than a 1.5 to 1, but, a bigger profit. But as it stands, I've decided to move it under here just to see if we can catch another bid off of that. And it just so happened it didn't work out, guys. Okay? We came back up, retested that supply. And we came back to the demand, okay, the demand that was created in the wake of that Aussie point hike, a 25-point hike, and then we got a bounce to the upside. So I thought, okay, here we go. this is definitely going to break. And came back down and ended up stopping me out right there for my small, modest profit. Okay. I think it was like 380 bucks. It was up at 1,200 unrealized at one point. Now, I don't like giving away that much unrealized profit. Go from 1,200 all the way down to almost, just under 400. But I wanted to see if that zone that was created was going to be strong enough, and it didn't do it. So that's trading for you. That's trading. I mean, hell, that would have been a pretty decent second chance entry even. But along the course of my entry to over here, the Aussie dollar went from a plus, I think it was a +9, all the way down to a +7. So it just got weaker as the week progressed. It got weaker. So, that's trading for you. I did leave quite a bit on the table, but it's a profit nevertheless, right? So that was that trade. And then, of course, yesterday, intraday, we had even more of a decline on these Aussie and New Zealand pairs that I was the most interested in. And, oh, by the way, just happens to coincide with some top setups over on the Edge Finder. And I ended up getting into, what was it? It was an Aussie, Kiwi Swiss. I ended up getting into a Kiwi Swiss trade. I didn't do it on this particular platform, but let's just go back to TradingView. Kiwi Swiss. Let's see here. So I closed out the trade yesterday. Okay, the Aussie dollar long. But then I went to Kiwi Swiss and bought into this one and took a loss. Took a loss, ladies and gents. I ended up buying right here on this 30-minute demand right here, this red candle right here. Really nice candle. I loved it. I loved how we had a lot of green candles after. It broke structure. But here's where it went wrong for me. Okay, this is one rule I did break. Price bounced into this higher time frame supply zone. If I go to a daily time frame, you can see we have this supply zone here. Now, I was assuming that we would be able to chew through that if and when we come up to that point, and go to the next supply zone because there's a gap closest to the origin of this overall strong move down. So I basically kind of pushed that zone off. I'm like, that zone ain't going to hold. It's going to be that, right? So anyway, I got into that trade. Okay. And this is just something to keep aware of. I got into that trade on a small time frame, on a 30-minute, but then it hit a higher time frame, much higher time frame. So you tell me, is a daily supply and demand zone, is it going to be stronger than a 30-minute? Absolutely. Okay, absolutely. So I kind of skipped over that, and as you can see, I took a loss. Now, I took that loss, and then on my other platform, because I have a 100K funded account, I'm playing around with a new strategy, okay? So I took a small loss on it. So now that's 2 losses, right? So what's my rule? What's a lot of traders' rules when you have a couple losses in a row? Step back. Hey, just step back. Well, I stepped back, but then like literally an hour later, I had a couple trades, a couple pop-up alerts of mine. I had 5, 6 alerts hit all at once. So it kind of became a little bit of a case of paralysis analysis, right? Well, which ones do I favor? Well, if I got a lot hitting at once, then I obviously resort to which one's giving me the highest scores. So I ended up looking at a couple of these, Aussie Yen and Aussie CAD. Okay, those are the 2 I settled on. So when I went and did my analysis on these, I saw, okay, great. Aussie Yen is looking awesome. If I look at this swing low, swing high, looked to buy a pullback into demand. So I was watching this 4-hour demand zone candle over here, this red candle before this spike up. But I got a little gun shy, okay, because I just took 2 losses in a row. So, you always hear people say, well, the trading gods are picking on just me, right? Just me. So when price came in and it met all my rules, it hit the demand zone. Oh, by the way, it just so happened to hit a 61.8 fib level. Oh, by the way, I had a anchored VWAP line to this swing low over here that was going right through that demand zone. I froze. I didn't get into the trade. And look what happened. It's just going off without me. It did this on Aussie Yen. It did this over here on Aussie CAD as well, where it hit this demand zone here. This one was a smaller time frame. I believe a 1 hour. Yeah, 1 hour. Okay. So I just got gun shy. This will happen, even no matter how long you're in trading. Okay. These turned out to be the ones that met all my rules even better than the other two I got in. Because on the other two, I got in too high on the curve. Okay. Meaning I got in somewhere up in this top quadrant. Well, these just so happen to be the best looking trades. So I got impatient. Okay. And I broke my rule on my curve analysis, which says I have to buy low, I have to short sell high, and I don't diddle in the middle. Okay? I diddled, but I diddled too high. So I just thought it'd be cool to, be open and honest and transparent, just show you that it doesn't matter if you've been in this thing 1 year, 10 years, 12 years like us. Okay. You still kind of fight these things from time to time. But yeah, but if I'm happy about one thing, it's the fact I took the 2 small losses and I stepped away from trading, even though everything said, Tiger, go out and buy these. Now, I wouldn't have bought both because I don't like to necessarily double up risk on any one currency, in this case, the Aussie dollar. But, it would have, the Aussie yen, I mean, this thing was just screaming at me. So yeah, I got annoyed at myself. It happens. It happens. We just pick ourselves up and come back. But at the end of the day, I stepped away. So I did obey the rule that mattered, because I very easily could have revenge traded and hopped in this thing and taken a third loss. Right. So yeah, that's the laurel I'm resting on. Right. But anyway, yeah, that was my day yesterday. No, it wasn't the trading gods looking at me and laughing. The trading gods, they don't care about any one of us as an individual. Okay. But that was my day. So there you go. Thought I would let you guys know it was a little bit of a nuisance, but today's Friday. We're going to find something new. Let me check the chat real quick. Oh, yeah. Brief explanation of how I use volume spread analysis. Yeah. Yeah, absolutely. So that's going to be down here. Okay. So it's not quite volume. It's basically, think of it like, I guess, a tick chart, if you will. Okay. We don't have centralized volume in currencies. It's not like buying futures or buying stocks. We kind of have to get a little creative. So essentially what the VSA says is, hey, it kind of looks at candles related to the previous candles. So kind of, think of it like just your average trading activity, right? Not volume per se, but it's trading activity. So if these green candles are average trading activity, then I personally care about where's my yellow candles, where's my red candles, like this. Because who has the power to create a ton of activity at any one point in time? It's the big banks. It's the big boys, right? Big boys on Wall Street. So anytime I see a supply or a demand zone that's created as a result of a red candle or a yellow candle, that's high volume. So if green is average volume, or average activity, okay? It's hard to get away from the word volume, but average activity, then yellow is high activity. And then red is ultra high activity or ultra high volume, however you want to think of it. So me personally, I like to use that and just see, okay, do my supply and demand zones, are they created with a ton of activity? In other words, is it an institutional zone? Is it an institutional supply or demand zone? So that's kind of the basis of how I do it. I almost never take a buy in a zone that's created on low volume. And that's the other reason I kind of stayed away from, these zones that ended up working out, right? If you look all the way at the bottom on this 1 hour time frame, well, you're looking at this average candle. Okay? Now it was an increase over the previous candle, but it wasn't up higher. It wasn't a higher than average volume bar. Okay. So I like to look at that and just think of the banks. The banks are creating those zones. Those are the zones I want to, potentially buy or sell from. Because remember, a bank has got to layer their order in. They can't place a full order like you and me at home on our laptop. Right? If they're making 100,000, 500,000, $1 million orders, if they place the whole order, they're going to get a sharp move and they're going to get a horrible fill. So they have to layer their order in. So accumulate. Okay. Accumulate or distribute if they're at the top end of a range, top end of a curve to short. So when I see that it was only one candle, okay, that doesn't sound like a lot of time to me. They got to layer their order in. So if they only put in partial order right here, price runs away, well, that's why then they just like to wait till price returns to potentially fill out the rest of their order. And that's how we get our bounce. Okay. Unfilled orders. That's my game right there. Unfilled orders. So yeah, that's how I use it. I just want to make sure I'm getting a yellow or a red candle in a zone, forms in the zone. Ecometer. You want me to look at the ecometer? Yeah, absolutely. Eco surprise meter. Now, a lot of these have kind of gotten a little bit weaker, guys. Okay. The Kiwi was in, well, here you go. I mean, here's your chart. I love that Nick put this on. Yeah, I love that. That it kind of gives you an idea of, hey, how strong or weak was a currency yesterday or the day before? Okay, a couple days ago, let's see here. You had Aussie. That's the one I was looking at. So yeah, when I got in this trade, guys, on Monday or on Sunday here in the States, this thing was up at 83%. So it's exceeded expectations on 83% of the, higher impact event releases. So, but as you see, what happened? Aussie dollar dropped. Okay. So it's no surprise just looking back in time to see, Aussie dropped. No wonder it didn't, no wonder my trade didn't work out. So, but yeah, currently we do have the Kiwi at the top. Okay. If anybody trades the Rand in South Africa, that's obviously the one leading, but the Kiwi is at a 71%. And then the two weak ones right now, or actually we have three now. So Canada is all the way down here, 42%. Swissy is at 33. The yen has dropped even more. So the yen was up here just yesterday, but now it's currently the weakest currency. So a very easy way to look at this is, hey, where's my strongest currency? Where's my weakest currency? Can I pair them together and possibly trade? Well, we already know that Kiwi yen is on the list, right? So if you're just isolating just the fundamental analysis, which is what which is what everybody on CNBC talks about, Bloomberg, they're talking about the growth numbers, the inflation numbers, the employment numbers. Well, that right there is a very simple trade plan almost in itself, but we still want to match it up with the top setups, to see if it's on the list. So yeah, Kiwi yen's definitely up there. Aussie yen's up there. Euro yen. Okay. Real simple, Euro yen. Yeah, your Euro yen's right there. So real simple way of looking at that. Strong currency versus weak currency. Right. And then pair them together. So yeah, let's take a look at a couple of these. Let's take a look at a couple of these. Kiwi yen, Aussie yen. Yeah. So at this point, guys, today being a Friday, I don't like to get into 4-hour zone trades like I do earlier in the week, because I'm not a big fan right now of holding trades open over the weekend. I really ain't. Okay. Not when one little drop of a bomb or a tweet can just completely gap past your stop loss on a Sunday. So on days like today, I just like to drop everything I do down to a smaller time frame. Go to a 15-minute, 30-minute, 15-minute, 5-minute. And I think about the best one I have right now, if we're looking at Euro Aussie on the list here, as a bearish -5. One of the items I'm keeping an eye on is this little 5-minute supply zone right here. Okay, keeping an eye on this spot right here. I got an alert set. So yeah, that's about the closest alert I have. Just to try to nickel and dime. I'm at break even for the week because of those losses yesterday, coupled with my win. So I'm not going to do anything too crazy today. I'll probably just regroup over the weekend and Sunday, obviously. And also to see what happens when the COT report comes out later today, guys. This is probably my favorite report. Okay. With the dollar going up this week, are we going to see a bounce? I mean, you guys see the last report, we did have almost a 3% increase on the net changes. So I'm definitely going to be interested to see what happens with the buck. Bitcoin, that's something I wanted to show you guys. We dropped, we've been just in a absolute bloodbath to the 10th power with cryptos lately. But one thing I have kind of observed, just looking over here, get rid of my moving averages for a minute. I got a bunch of lines at the bottom. Well, Bitcoin dropped into, think about this. So this is just a question I have for you guys. Okay. Number one, it's not on our bullish list. It's a neutral item right now. I think it's right at a 0 or -1, something like that. But we did at one point drop into this monthly demand zone. Okay. And if we drop to a weekly, inside of that monthly is a weekly demand zone. And then inside of that weekly, talking about confluences, we have a couple daily demand zones. Right? So here's our weekly right here, and then our monthly is the bigger one. But we had 2 daily zones. Now we skipped through the top one, and we hit the daily demand zone at the bottom of the weekly demand zone. Okay, so it can get confusing. Is this going to be what maybe gives us a chance of pushing Bitcoin to the upside? We'll have to find out, because as you can see, it did get a pretty decent bounce off of it. Right? Look at that, just a beautiful 1 hour wick, and then close, and now we're on our way up. So I'm not going to put money on it, but I just thought I would show you guys this. You know, anytime you're thinking about getting into a trade, just keep in mind, when in doubt, zoom out. You know, look to see, are you in some higher time frame confluences? And right now, I think we are in Bitcoin. But again, because it's not on the top setups, I'm not putting my money on it. But if I were just looking at this as a technical only trader, I'd probably be buying into this. Okay. But I'm not going to do that because it's not on my list. I don't want to break my rules. My rule states I have to make sure the fundamentals and the sentiment match up first. The least important of the 3 analysis groups, in my opinion, is the technicals. I don't know if that's a hot take or not, but that's just the experience I've had on it, because I tried to go it alone, just looking strictly at zones by themselves, okay, for close to a decade, technicals only. But then again, I've mentioned this the last couple of times I've been on here. Ever since I added the Edge Finder, ever since I started paying attention to what really matters, to what they're talking about on the legacy media, the financial channels, Bloomberg, CNBC, all the others. Until I started following this, I was kind of muddling around in mediocrity. So, that's just a nod to the Edge Finder. Okay. It's also a nod to the stock box as far as using this to help you find some good stocks as well. So definitely, one thing I wanted to say on this is, here's the cool thing about this. We do not have to be economists. We don't. Okay. We don't have to be economists. Let them do their thing. And just like the meteorologists, they get things wrong all the time, do they not? But let them do their thing. Get you an Edge Finder. That way you can at least start utilizing this to help you with better items to trade, buy or sell, okay? From the fundamentals, from the sentiment point of view. And then you can worry about learning all these individual items along the way. That's probably the best piece of advice I could give on this. That's exactly what I did. I didn't know what the hell consumer confidence was. I didn't know what the personal consumption expenditure report was. I didn't know how unemployment claims worked. But I got this thing. I started following the setups, the scores, and I immediately started to get that success. The success of buying into better supply and demand zones. And then you can just kind of look and study these things along the way. There's some pretty good videos on YouTube, I got to say. That kind of, spend 30 seconds, a minute on each one of these little boxes. I would highly encourage it. And I might even find the link for that and share it next week. But it's a really cool video I did find one time that shows and explains and pieces together all of these different items. So I'll look for that for you guys next week. It's a good idea to understand the basics. You don't have to be an economist though. Okay. And then obviously the relationship between smart money and dumb money. Commitment of traders and the retail sentiment. You find all that and you get a good score and you got a lot of boxes checked, positive or negative, you've got yourself a trade plan. And then it's just a matter of going to your technicals, the sexy stuff, and finding a good zone or support resistance, okay, however you guys trade it, and find better and cheaper entries. So just my little spiel on the Edge Finder for the day. But guys, good grief, it's already 8:30 my time. So I do believe it's already time to pass the show over. We do have Trader James coming up, Forex James. So definitely stay tuned for him. And then Marco looks like is to follow. I'll be back on next week, guys. Short and sweet. You have a lovely day. We'll talk to you then.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello. How are you guys doing? Happy Friday, end of the week. Hope you've all had a successful time. Been a very interesting period, to say the least, especially to start the year. So nothing's really changed in terms of my positioning. Still in euro dollar. Everything's pretty much the same as what I've been showing you for the past 2 days. The only difference is just some slight management. So euro dollar was taken, as I said yesterday, mainly on just a technical view. So what we saw on euro dollar was, I was just making sure you guys can see my screen. So it was taken mainly on, just a technical view here. So as my strategy says, again, it's the same as always. Where's the brush tool down here? We had expansion, break above previous structure here, pull back to retest into the fib level, come and meet the moving averages, and then anticipating a slightly higher move, looking for around 1.2. Not a huge target, just a little bit of it'd be roughly a 1 to 2, give or take. That's the idea. That's why I'm being a little bit more heavy on the micromanagement of this position. So as you can see, the stop has been reduced by 43%, obviously assuming that the full stop was 100%, which is 1% risk. So it was reduced by 43%. The reason behind this was because we dipped down, came and retested this 200 moving average, and now we're starting to see some buyers stepping back in. So if we end up breaking lower, we'd not just be breaking the previous low right here, we'd also be breaking the 200 moving average, indicating to me that the trend is shifting towards bearish, and the dollar is likely regaining its strength into sort of the 99 level over here. We'll go into the dollar maybe later, but yeah, that's the euro dollar position. Not that much going on. Pound yen, we were looking at pound yen over the past 2 days. So I think Wednesday I saw the entry. Thursday we were talking about the entry, and I took the entry very early this morning. So what we had here was a really nice pullback into the fib zone right here, still respecting our 200 moving average, following this nice longer term uptrend very, very cleanly. And then we had this really nice H4 bullish engulfing candle coming out of the fib. So I decided to take that, and we do have, or we did, maybe it's disappeared, pound yen here. So it was slightly more bullish actually over the past 2 days. It seems to have dropped down to neutral, but as I've been saying, I think the yen pairs are still quite an easy buy, although we did have some negative news, or bearish news, if you will, come out of the UK with the Bank of England yesterday. But as I was saying, not a huge deal in my opinion. Tatienda, hello. Aizen, you caught some Aussie US dollar longs. Fantastic. Well done. New Zealand dollar Swiss. So as I said, I did scale into this position back over here, looking for basically the same thing as what I always do, which is a break of this level and then the retest and continuation. We didn't get that. We actually came back all the way down to this 200 moving average. So the scale in was taken out, but the initial position is still alive and healthy. Silver, still in silver longs. So nothing's changed here. I actually slightly reduced my average price. Sorry, that's not the right word. Reduced the price of the initial position from 80 to 77. So slight updates on that one. But overall, we're running quite nicely, looking for a continuation back to the upside. It's more of an accumulation position over a longer time horizon, not just a sort of swing trade or an intraday trade. And the trade of what seems to be or could be my trade of the year is the pound Aussie. So this one's just continuing to melt. Unfortunately, I'm not finding any success with scale-ins. I did attempt one, which also was taken out, unfortunately. But the original position is still open and heading towards a 5% target, looking to trail the stop a little bit further on the break of the next low. So on the daily, we can see, obviously, this candle from yesterday. Still haven't fully cleared it. So if we can see today's candle break and close below yesterday's daily candle, I'll look to trail the stop roughly around here and just get a little bit more aggressive with the tight stop loss, because it's looking like we might want to see a bit of a correction to the upside here. We are technically in quite severely or quite significantly oversold territory. Just looking at technicals, I mean, the RSI has been oversold for a couple of days straight now. So yeah, it wouldn't surprise me if we do see a bit of a pullback. So I just want to be cautious of that. And with that in mind, Euro Aussie, we were looking at this one yesterday as well, and I was saying I would really like to get into Euro Aussie. And the entry I drew or marked up was actually pretty perfect. So we were looking at this, which is just a very regular sort of fib pullback. However, I was very uncomfortable with taking this, so I didn't execute the position. So far, it's seeming like I've missed a trade. But if we go onto higher time frames, so if we look at the daily here, the moving averages on the daily have just crossed. We've still not really come back up to retest this previous level of structure. And again, same thing with pound Aussie, is we're currently quite oversold. So I just think entering where the fib was on the H4 would have been a pretty dangerous area. Now, it's one of those things. Probably missed the trade on that, but I'd rather be safe than sorry, especially because, like I said, I've already got exposure on pound Aussie, so I'm not desperate to get in. It's not a huge deal. So let's have a look at the edge finder. Let's see what's going on here. In demo trading, whenever I take a trade, I'm in profit, and in real, I loss always. That sounds like a detachment issue. So when you trade demo, you have absolutely no ties to the account, no ties to the money. You've got no reason to care. So, you could say, oh, I use it for learning. But even so, you mentally will allow yourself more aggressive entries. You'll allow yourself to do certain things that you wouldn't feel comfortable doing on a live account. And that can be, beneficial or negative. It can go either way. But you need to recognize what it is you're doing differently on a demo compared to the live, because I can guarantee it won't be the same thing. If you're experiencing two completely different outcomes using the same situation, then you've got some micro differences somewhere that you need to figure out. Brian, hello. Azin, yeah, you said you're in Aussie dollar. We'll take a look at that in a minute. What do I think of the psychological level around 158 and dollar yen? That's where the BOJ ran the rate check. Yeah, so we spoke about dollar yen yesterday. I was saying I'm not certain that we're going to get the intervention till around 160. I think again, I need to emphasize that this is just I think. I couldn't tell you this for certain, obviously, but I think we won't see really anything from the MOF until about 160 plus. Even 160 might be too soon. And the reason is because if we just think about what an intervention is and what it's used for, it's just to slow down the depreciation of the yen against the dollar. This did that. It was essentially, it obviously wasn't an intervention, but it did a similar thing. So I don't think they would run an intervention straight after. I would expect this to be sort of the area of caution, and then above here, again, area of caution. So yeah, that's pretty much it. I'm not willing to trade dollar yen at the moment. I just don't really see anything here for me, which is why I've gone into pound yen. I like Aussie yen as well. So I think there's other options rather than dollar yen. I just don't see much of a appeal at the moment. Is gold heading to 5,000 again? Tell you what, Brian, if you can go on Amazon and order me a Magic 8 Ball, I will give you the answer happily. Jokes aside, though, the institutions, sort of like word on the street from the bank reports and general forecasts, is that gold's going to 8,000 by the end of the year. Whether that will happen, obviously, is anyone's guess. But I wouldn't say it's completely out of the realm of possibility. It looks like a huge target. It sounds like a huge target. But if you just look at the way gold's been moving and how many times have we sat here and said, oh, it could reach this level, even though it sounds, far away, could reach this level. And it's done all of that. Back in, I think it was at the start of 2025, me and Nick were talking about 4,000. And at the time, that seemed like quite a large target, but it reached it very quickly. So 8,000 is definitely possible, but I wouldn't be banking on it. I wouldn't be taking trades specifically looking for 8,000 just yet anyway. But the daily looks good, to be honest. I don't see any particular reason that we couldn't just continue to run higher from here. But again, we'll see. Well done, James. I'm happy for all your current positive trades. That's great considering how the markets have been crazy for the past few months. Thank you, Tatienda. I appreciate that. Yeah, I mean, the markets have been tricky. I don't think anyone really can deny that. But this is where the ability to have different views on the market at the same time. So to be able to have a long-term bias, like I did on silver, to say, okay, I'm still long-term bullish on silver. I'm happy to use this as a dip buying opportunity. That's one strategy, one thought process in one trade. But then you can go to something like gold and you can express your short-term view by scalping this downside on momentum. And that's basically what I've been doing. So I've been accumulating some silver on this account. And then on a Top Step account, I've just been scalping metals to the downside. That's all I've been doing. So, I think Nick talks about it quite a lot, but it's about having the ability to diversify your portfolio, not just in assets and in positions, but also in strategies. So, if you are in a big risk on regime and you're buying and trading around that specific regime, and then something happens, tariffs, war, whatever kicks in overnight, all your positions are going to be done. So you need to be able to either minimize that loss or pivot very quickly and capitalize on that shift. Anyway, Bitcoin. I am actually looking to be short on Bitcoin at some point. Now, this might not be the best idea. I'm not 100% sure just yet, but I don't mind the idea. So what I'm looking at on Bitcoin, we did cover this yesterday, so I won't go over it too much again today, just so I don't bore you. But Bitcoin has a history of these crashes, and it seems like we're currently in one of them again. So back in 2017, we had an 80% crash. 2022, we had a 77.6% crash. Right now, we are breaking pretty much every technical support. The only thing that's really showing any desire really is this 200 weekly moving average, which absolutely could act as a nice level of support, and we just bounce to the upside from here. But yeah, to be honest, I'm not convinced. I would rather be looking for a pullback to short. So the plan I've got currently, and this might change, but currently the idea is to look to be a short seller around the 61.8 level. So we could come and correct some of the impulsive candles we've got on this left side, retest this previous support level. The downtrend on the daily is looking very healthy. So just a reasonable pullback and continuation to the downside towards maybe 40K, 50K, 30K, I think is reasonable. But again, I need to add a disclaimer there that I'm not a crypto guy. Don't trade Bitcoin in fact, I've never traded Bitcoin before. I do hold some in a ledger, but don't take this too literally. Do your own research. Absolutely. Took my first trades, ending up with 12 consecutive losses. That's rough. I mean, I don't really even know what to say to that. To be honest, what you should do is have some sort of stats. 12 consecutive losses is very, very rough to deal with. So if that is the case, it seems like something's probably broken, whether it be you're trying to capitalize too much on this shift that we're seeing in the markets, obviously gold down, silver down, Bitcoin down, that sort of shift that we've had. Or again, the strategy may just be completely broken. So I would, go and hit the journal, see what you did wrong, compare it to back tests, and sort of dissect it and optimize it from there. What's my thoughts on Euro New Zealand? I think I did have an idea on this one, but I have kind of scrapped it. Yeah, so it's getting a bearish reading. So I was looking to be a seller, but I didn't really pay much attention. And it seems like I've actually missed a potential entry here. So using the Edge Finder, which, as I just showed you, has a bearish reading, leads me to obviously want to be a seller. Now, the interesting thing here is we have seen price break below the 200, come back up, retest, and we're currently seeing a rejection on this current daily candle, telling me that sellers are dominating the market. We're seeing the 50 and the 100 moving average also start to cross. So it looks like we could be getting a bit of a trend change here. Now, where would I want to sell is the question. So as I said, I think I've missed the opportunity really here. So what I would have done is draw the fib from the high to the low. Yeah, and you can see that we did come to the fib, really nice rejection off the 100, come back below the fib. So this would have been the perfect entry. So it'd just be a case really of doing the same thing. So now all I would do is move the fib from the current high that we've just formed to wherever the next, to wherever the new low forms. And then I would be looking to be a short seller again there. Does that make sense? But yeah, excuse me. That's it. Very simple, very straightforward. If the Edge Finder is telling me to, if the Edge Finder is saying something is bearish, generally I will be looking to sell, and vice versa if it's bullish. Okay, what moving averages do you use? 50, 100, and a 200, all exponential moving averages, so EMAs. So I don't think there's anything I'm really paying attention to at the moment too much. Unfortunately, didn't take this trade. So we were looking at the Nikkei yesterday. So we were looking at this resistance level, and I said, we've got two options really that we could either, and so I'm saying we, I'm talking about obviously me and you guys in one, but the entry could have been here. This would have been quite aggressive because we obviously would have been buying into this level of resistance. Option number two is we wait, if you're more conservative, for this break, which we've got, and then enter on a potential retest of this level and continue higher. That's kind of the only option we've got now, because obviously we've missed the opportunity down here. So I think the plan is actually just to wait. So I'm going to set an alert here. Actually, I'll set it slightly higher there. So if my alert gets triggered, I'll be looking to be a buyer of the Nikkei. Australian dollar Swiss continues to run to the upside, but the price action is just so choppy. I can't really find an entry. Pound New Zealand also seems really attractive, but not that interesting considering I'm in pound Aussie. Australian dollar yen would still like to be a buyer, but again, the price action is not really that great. And that brings us full circle to Euro Aussie. Right, so what else do we have? So the DAX is getting a bearish reading. So let's go back and have a look at the DAX. Actually, is the S&P still getting bearish reading as well? So we'll take a look at the DAX and the S&P. Yeah, there's nothing here just yet. So what I'm seeing on the DAX is that we've very clearly double bottomed here. And the overall trend, according to the moving averages, is pretty much just sideways. There's not really an established trend. Like here, you can see that we can see that the moving averages are fanned out to the upside, very clean, very easy. Whereas here, they're kind of downtrending, but it's not a clean formation, if that makes sense. So really, I think if I was going to be a seller of the DAX, I would need to see it break below this level of support, come back to retest, moving averages form bearish, and then I would look to be a seller on this retest. At the moment, that's all I can see really I suppose the other option, if you were more aggressive, which I would avoid this personally, but something like this, just look to sell on the high because we are forming these lower highs overall. But yeah, not my style of entry. And it seems like the similar thing or a similar thing on the S&P, although what we could see on the S&P actually is a retest of these moving averages and then a rejection to the downside. That's a little bit more, what's the right word? A little bit more sensible, I think, than the DAX. So I think if I was going to short one of them, I would go for the S&P. So I'd be looking again for a pullback to these moving averages, a rejection, and then maybe an aggressive entry, something like this with a stop, maybe at the high, and just see if we can get some type of runner. But yeah, that's it. Again, that's kind of trying to force an idea, but that's all I see right now. Ball out. Wow, I've not seen you in a while. How you doing, my friend? Why are you cautious about dollar yen, but think other yen pairs are good to go for longs? So it's more just on a price action view. So dollar yen, I'm not overly satisfied on the dollar just yet. I don't have enough signals to justify buying it, to be honest with you. Again, just on the dollar, but also on dollar yen, I'm just not seeing any entries. So I think really the only entry would have been right down here, which obviously I've missed. So that just leads me to other yen pairs that have got slightly better entry opportunities, like pound yen. Like pound yen here, that had a really nice clean pullback. The trend is intact on the H4. The technicals are just cleaner, easier to trade. Does that make sense? So it's not really a huge fundamental reason that I'm cautious on dollar yen. It's more just I'm not satisfied with it overall. Have you seen my BTC to FITI a few weeks ago, flushed down the toilet? No, I haven't ball out actually. Caught Australian dollar Swiss longs, James. It's Craigie. Hello, Craig. How you doing? Yeah, I mean, I think I do still quite like the Aussie Swiss, but it's just, again, it's a little bit difficult to enter. Just looking at the way that this market's moving, it seems like the best opportunities really are when it pulls back to the 200 moving average and then look for an entry. Because at the moment, it's quite clean. This is like a very typical uptrend. So we've got higher lows here and we've got higher highs. So it's very basic. So the problem is if I drew a fib, likely we would actually have to form a lower high, which would obviously then break a large portion of what is attractive about this market right now. So for my strategy, there's just no way in at the moment. This obviously that could change. But yeah, right now I'm just not seeing anything. But yeah, I think that's pretty much it in terms of what I'm looking at. Interesting. I've just noticed the dollar has flipped bullish. So the dollar is getting a short-term bullish reading on the top setups, and it's still bullish on the strength index. So the strength index just gives you a bit more of a longer-term bias. So if you were looking for sort of a multi-week, potentially multi-month position, you would really want to be looking at the economic strength index as opposed to the top setups, because the top setups can change quite rapidly. However, the dollar, as I said, the dollar is getting a bullish reading here, and the top setups is also giving the dollar a bullish reading. So maybe my dollar yen my dollar yen avoidance actually might change. So I think what I'd need to see on the dollar, I mean, this is looking a little bit ugly. So I still think we could possibly come up to around 99. And then that would be a point where it's like, okay, are we going to start retesting and breaking above 100? Or are we going to continue lower? So I think if I was to be a buyer on the dollar, I would need to see a pullback into this previous level of structure, into the fib, and then a continuation higher. And that might give me some sort of dollar long ideas. But yeah, for now, again, I'm just a little bit cautious. Dollar is not bullish. Yeah, I mean, I'm just talking specifically about the Edge Finder readings. Aizen, you've spoken about the Aussie dollar a few times now, so I'll take a look. My apologies, I did forget. Cut long on the pullback to the gap. Oh, this gap here. Ah, very nice. Yes, lovely. I really like that. Pullback on the H4 to the 100 moving average really, really nicely. let's see, was this on the fib? Not quite, but still very good entry. Really nice. Yeah, I mean, to be honest, again, for me personally, there's just not really an entry at the moment on this one. But yeah, congratulations. Really strong trade. Okay, right. So silver's still getting a bearish reading. Not a fan of that. I would like that to flip to a plus 16. That would be nice. Dollar ZAR's getting a bearish reading as well. So what we could do is actually look to be a short seller on dollar ZAR, but then also a buyer of the dollar on something else. And that way we get a little bit of a diversification. So if the dollar did end up running towards 99, either way, whatever decision it decides to make, whether it again be continuing to 100 and above, fine, we'd be in position A. If it ended up going back down to, towards 95, dollar ZAR could pick up the slack. So that could be a little bit of a diversification option on the dollar, if that's something you are interested in doing. However, I do quite like the idea of being a short on here, but right now it's looking a little bit precarious, just because we do have obviously high, slightly higher high, low, higher low. Yeah, short term, not a huge fan, but maybe there's some potential there next week. Anyway, ladies and gentlemen, I've got just a couple of minutes left, and then I think it's Marco coming to take over the stream. Let me just double check. It is. Marco's coming to take over. So if there's any final requests, let me know. If not, I can keep yapping for a couple of minutes, and then I'll hand it over. So let's just take a quick review here. So pound yen, I'm not really going to trail stops here, to be honest. I think I'm just going to let it run as it is. And the reason is because we could see a deeper pullback towards the 200 moving average over time. I don't want to limit the position just yet by trailing the stop. New Zealand dollar Swiss, I might trail the stop, actually, having just seen it, may trail the stop just to below this low here, because if we do end up coming below here, then that would mean that we've printed now a new lower low and we've broken out of the trend. So I think a nice protective stop there would make sense. Euro dollar's already trailed, so I quite like that position as it is. Silver's doing fine. There's nothing really to do on silver at the moment. I think eventually I'm going to be trailing stops just to break even, just to protect the positions, but I'm not really looking to do anything. Ideally, I'd be taking profits around 130 to 150. Again, long-term view, but we'll see how that develops over time. And pound Aussie, again, there's nothing for me to do here. Just continue to trail stops and potentially look for a scale in if we see a pullback on the lower time frames. The Russell's doing quite well, but I don't really have anything for the Russell right now. My original position on the Russell was taken at break even. So yeah, I think at the moment, the only other position that I would really keep an eye on is the Nikkei. So as I said earlier, the only way for me to enter this position right now is if we have a pullback towards here, and that would just be a break and retest formation and look for a continuation to the upside. Maybe towards 60K, I think would be a reasonable target over, again, a longer period of time for sort of a nice swing trade would be cool. Yeah, that's it, actually. Oh, and Bitcoin. Yeah, I forgot about Bitcoin. So Bitcoin might be a good short, but again, do your own research. Don't take this too seriously. If I did go short, it would be very, very low risk, more just as a experimental trade rather than a trade necessarily to capitalize on, if that makes sense. Generally, I stay away from markets I don't trade on a regular basis, just because markets have their own sort of behaviors. And generally, you can sort of spot them quite easily when you trade markets often. So, for example, with G7, G10 markets, generally, I can do okay because I understand how they move and how they work. But with Bitcoin, I don't have that. I don't really understand how it moves on a sort of intraday basis. I also don't really know that much about Bitcoin on its fundamentals, if you will, like what's at the core of Bitcoin. I'm not really that sure. And to be honest, I'm not that bothered either. So yeah, that's why the risk will be significantly lower. So yeah, DAX and the S&P both getting bearish readings. Interesting, but there's nothing just yet to signal me into a short. Actually, I've just seen, I've got run out of time, but I'm just going to quickly mark this up on here for you. I've just seen this. I don't know why I didn't see this earlier, but having a second look, broken below previous lows, come back up for a retest. Looks like the moving averages are about to shift, and this is currently a 50% 50% retracement. This could be quite a nice trade, but I would need to wait for a confirmation just to be extra sure. Anyway, ladies and gentlemen, we have Marco coming to take over the show. Don't go anywhere. Thank you for being here. Stay safe, enjoy your weekends, and don't get margin called.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Oh, hello. I was yawning. So welcome to the stream. Hope you're doing well. First, to get things started, let me put in the jot form for the giveaway. So if you don't know, every single day during my segment on the stream, I give away a free DNA fund challenge. So let's find the form. Here it is. Basically, click the link, fill it out, and then in 15 minutes, I will put all of the names in a wheel. We will spin the wheel and find the winner of today's giveaway. Today we have, let me check in my codes. Today we have a 5K one-phase account. So that's what we have for you today. Hopefully I don't open all of the codes at once here. I'm always pretty scared of opening windows because if I share all the codes, then you're just going to use them all. So I'm going to have to be careful. Getting into the markets, we have the Nikkei flying higher. So the Nikkei is a trade that is running for me, running at around 2%, something like that. Looking great so far. So working out pretty nicely. Hope this continues. My trailing stop loss is at 52386. By the way, this trade was a trade signal in the A1 Discord. If you want to join the A1 Discord, click the link in the description and use the code Marco to get 25% off on your subscription. So in the Discord, you'll get all of my signals, all of my information, everything that is in my head, and you get a trading chat with other successful traders as well. Congrats on the Nikkei. Yeah, I'm still not locked in with any percentage, so I still have, I've trailed the stop loss, but if this thing drops, it's going to be back to break even. So I should trail the stop loss pretty soon. I'm looking for a swing low to do it. Maybe below this low, just a little trail, small trail, that may be good. I do also have, as far as trades go, well, I don't have much, if I'm being honest. I was looking at the Aussie dollar. Unfortunately, I missed this entry, so I didn't have a buy limit set, and I was asleep. So we hit the level during the night. If we just move this here, we kind of hit the level at 1 in the morning, so missed my level. Great entry, though. I know Alan is in this position. I would love to be in this position. Aussie hawkish, Fed dovish, or RBA hawkish, Fed dovish. Perfect storm for this thing to go up. Maybe it pulls back a bit more. Not sure because we have just caught up with the 20 MA. Gold catching a bid. Silver. For silver, I actually took a position from Nick. I took a signal from Nick on my prop firm accounts because I want to take as many trades as I can on my prop accounts. It was a short, and that's been a pretty good position. So this was, again, a trade signal from Nick, a sell on silver worked out great. We also trailed the stop loss recently. I'm not sure exactly at which level it's in the Discord, but basically great position and pretty healthy for my prop firms. This is gonna be pretty good. So that's the story for gold and silver, kind of catching a bit on the day. Also, one more news: if you have been following my challenge with trading using ChatGPT, so I used to trade only Forex and the S&P, but recently I started adding positions on gold and silver. So ChatGPT has started to trade gold, and it took a buy position recently, and it's up. And I think the last position on silver, so is this one on silver? Yeah, this one is on silver, and the closed position is on gold. It was a sell position, and it hit the take profits. So just if you want to get an update on that, I started trading gold and silver on this account. This is the DNA 25K two-phase challenge. So we will see how it goes. I'll talk more about it a bit later. Google is another thing I had on my watch list. It's another thing I'm looking to sell. Let me see how the NAS is doing. NAS up on the day. S&P also pushing higher. Now, if you look at the whole stock market, if you look at especially the technology stocks, so the stocks in the NASDAQ, you would notice Google is the best performer. So we can look at things like Meta. Not looking so great. We can look at NVIDIA. Okay, flat. Oracle. Oracle looks horrible. Horrible. What about PayPal? PayPal looks horrible as well. But in all of this carnage, you have Bitcoin. You have Google doing quite well. So that's why I think this general outperformance is a bullish signal. That's why I'm considering buy setups, but I've been doing some research, I've been doing some reading. At the moment, I just don't have the conviction. I don't have enough reasons to take a buy. There's a bit of a shaky environment. The stock market does not seem to be doing well in the United States, at least. In Japan, it's a bit of a different story. Let me also see in Germany, what is the DAX doing? DAX doesn't look so great. So essentially, Google, it looks good. Technical analysis is nice. The fundamentals are not so great in terms of numbers. In terms of the story, Google Gemini is the clear winner of the AI race at the moment. But again, I've been doing some reading, and I think more bearishness could come for the stock market, especially the stocks or the companies that are investing into artificial intelligence, because there are massive investments into CapEx spending. And where are they getting the money? Well, they are reducing buybacks. So stock buybacks are a great tool for companies to inflate their earnings per share because they go in and they buy back their own stock, and thus they push the stock price higher. So they have reduced the buybacks. We can put arrow down. And where is the money going into? Well, the money is going into AI CapEx, capital expenditure on artificial intelligence. So that budget is increasing. Now, what would you say? Here's a question for you. What would you say is visible in the stock price sooner? Buybacks or the AI CapEx spending? You can put a B for buybacks or AI for AI CapEx. Put it in the comment section. I'm interested to note. So short term, what is a bullish catalyst for the stock price? Is it buybacks or is it AI CapEx? Let's see what you guys think, because I think there's a pretty clear winner here. Let's also see James Lee. Hello, welcome. Shirley, congrats on the Nikkei. James Lee, hey Marco, what trades are you currently in? I'm only in the Nikkei on my sort of personal analysis. And I also took a signal from Nick for selling silver. So I'm kind of in two positions, you can say. You have Nikkei's flying. Too bad I missed the Nikkei trade. There's going to be more trades. It's just one of those. I just missed the Aussie dollar. Okay, I just missed the Aussie dollar position, which is kind of a shame, but I was asleep. That's how it is. Jotform keeps telling me only one entry is allowed, but it never accepted one from me. Should be working. We tested it out and it... if I fill out the Jotform, how do you contact me? It's only my name. We get an email as well. So if you go to the next step, it'll ask you to put in your email and we contact you through your email. So essentially, after my segment, I will contact the winner and I'll give them the code. What's your thoughts about Michigan consumer came in strong? I'm going to check it out. I'm holding AUD USD in profit. AI, so buybacks is the answer. Short term, bullishness in the stock price will come from buybacks because, again, companies directly putting their money into inflating the stock price. Companies go in the market and they buy a bunch of their stock, inflating the prices higher. AI capex actually has a negative short-term effect on the price because this spending will only materialize in the next 2 to 3 years. So it's going to be a long time before we see this materializing. It's going to be a long time before companies can actually implement artificial intelligence in their day-to-day business. It is extremely complex. There's so much regulation. There's so much bureaucracy. There's just so many steps to take before you can implement actual artificial intelligence in your day-to-day business and actually replace workers. So I think the return from the AI capex is still 2 or 3 years away, which means companies are going to burn through a bunch of money, right? They're going to kind of push their stock price lower, only for it to maybe pay off in the next 2 to 3 years. That makes me a bit neutral. That makes me a bit bearish on the NASDAQ. And right now the price is reflecting it. So the price here looks flat. Unless we can go back into all-time highs, I'm not going to be super interested. That's also something I have been saying, that I'm looking to see the NAS go into all-time highs. If we can't go into all-time highs, super bad sign. By the way, here's the form once again, just so you guys have it. So in the comment section, link to the form, fill it out, and you will be entered into a giveaway for a free funded challenge from DNA Funded. Bitcoin is also really, really hot right now, or cold. You can say it's cold right now because people are selling it like crazy. Everyone is looking at Bitcoin. No one knows what is happening. Well, the simple explanation, crypto winter. We are now in the crypto winter, and that's why this thing is looking so freaking bearish. Weekly chart, this could just be the start. If we look at the previous corrections, like the one in 2018, like the one in 2021, look at the size of those corrections. So 78% correction. That is absolutely massive. Okay, that's an absolutely massive correction, and we could see that happen again. From the peak here to the trough, only 52 for now. So I would not be surprised. I would not be surprised if we hit, I don't know, maybe 70% correction. It can definitely happen. You know, it can definitely happen. And also, this is not great for me because I'm holding some Bitcoin long-term, which I bought right around this level. I think I bought it at 70. 70 is my average entry price. Also, MSTR, MicroStrategy, Michael Saylor, this thing is crashing lower as well. Although I would expect a bigger crash, if I'm being honest. What is this? Is this a split? Okay, yeah, that's a stock split. Anyway, I would expect an even bigger crash because Bitcoin has been doing really poorly lately. But I know Michael Saylor is worried about this. I mean, is he worried? He's always going to have money. But the holders of MicroStrategy are definitely panicking. So you don't want to be the holder of MicroStrategy at the moment. I mean, you never basically wanted to be a holder of MicroStrategy because it's a huge Ponzi scheme, if you ask me. If you want to hold Bitcoin, just buy some Bitcoins. Let's go back to Google. Questions. Michigan consumer. Yeah, we can take a look. So NFP has been delayed. I'm sure Nick talked about this. The NFP print will come in next week on Wednesday. So you can see it here. Next week, Wednesday, February 11th, we have the NFP. The thing that we did get is preliminary consumer. Let me see. Yeah, okay, so this came out, preliminary consumer sentiment, preliminary inflation expectations. I would say it's not a massive deal. It's not a massive thing. I haven't seen this data point move the markets much in the past. The thing that does move the markets is the CPI print, NFP print, JOLTS, job openings can move the markets. The Fed press conference absolutely moves the markets. ADP, no, not really. If I'm being honest, if you look at the past, let's say, data, ISM services do move the markets. ISM manufacturing do move the markets as well. If we look at the dollar, has the dollar been super active this week? Out of these news events, this one, no, not really. Minimal reaction. This one, job openings, not really a big reaction. Then we have the ISM services, also not a huge reaction. The last big event was maybe the manufacturing, but not really. PPI, yeah, definitely PPI came in hot, so came in bullish for the dollar in general. So inflation prints are always hot. Not hot, but inflation prints are always market moving. What do we have here? Damn, we had a lot of news. GDP growth rate, that's a big one as well. So the GDP number is a big one, absolutely. I'm looking at the NFP. I want to see the NFP print just to check if anything is new with the Fed watch tool. If the probabilities have changed, let's take a look. By the end of 2026, no, still the same. Now, time for the giveaway. So let me grab the names. You still have a little bit of time to fill it out until I grab the names. Today is the 6th of February. So 6th of February. Okay, here we have it. The names, copy, paste, spin. Can it spin it? Can we spin a bit more? James or Clint? It's gonna be Clint. So Clint C, congrats on winning the giveaway. After my segment, in around 15 minutes, I will send you an email with the code for a free 5K one-phase DNA funded challenge. So congrats to you. You can expect an email. And now back to the show. AUD USD. I love the Aussie dollar. AV says, hey Marco, could you cover Euro Aussie and Pound Aussie? Absolutely. Let's take a look. Euro Aussie. Euro Aussie. What do we have on the Edge Finder? Euro Aussie. I do love the Aussie. I think the Aussie is a pretty bullish currency at the moment. Euro, not so much. Euro seems to be bearish. Not a bad story to short. I would say this is a good opportunity. You also have the Edge Finder going in your favor. So again, ECB is not hawkish. RBA is hawkish, which does create a good opportunity to get in on a sell setup here. So Euro Aussie looks nice. I think there is an edge in this one. Pound Aussie. Let us take a look. Pound Aussie, I've been looking to sell it. Let's remove the alert. Check the Edge Finder as well. Neutral reading on the pound Aussie, which is not great. I would love to have the edge finder go in my favor. I know there was a bearish reading, but looks like we lost it. If we go to the history, we can check a bit more GBP AUD. So pound Aussie had a bearish score on the February 1st. That was the last time. Technical analysis is bearish, no doubt. Even I would say the whole macro story with the RBA, with the Bank of England. Yes, RBA hawkish, Bank of England. I think they're a bit dovish. If I remember that correctly, I'm gonna have to check. Gonna have to check on that. Did we have an event? Yeah, we did yesterday. What was the vote for a hold? Let's see, 0.5, 0.45, 0.27. Okay, if we open this up, first number, vote to increase, vote to decrease. So we have 4 people voting for a decrease in rates, which is dovish. So Bank of England seems to be dovish. They may start cutting rates even in the future. Not bad. Actually like this. Let's put pound Aussie back on my watch list. I do like this a lot. Actually, if they're going to be dovish, this thing is going to continue going lower. Taking the pound Aussie, putting it here. Google, I don't know. Let's leave it for now on the watch list. But pound Aussie looks rather good. Looks rather good. Alert. Although I would love to get a bearish reading on the edge finder. I do think this is a nice play. Yeah, especially with that central bank divergence. Same thing as on the Aussie dollar. Same thing as on here. You know, a nice divergence. So even the price action looks great. Price action super bullish. We just touched that 20 EMA. Damn, I should have had an order, but part of the game. I'm going to try to get in next week. Maybe we pull back a bit more. So if we can do this, break the low, trend line, I would say that's pretty nice. So watch out for that. Of course, if I do take a position, you're going to get notified in the A1 Discord. Link in the description. You can use the code Marco to get 25% off. Now time for the sponsor. So just a quick shout out to DNA Funded. If you're looking to expand your trading capital, if you're looking to get funded, we have the A1 Live 25% off any DNA funded challenge. So this is the code A1 Live. This is my personal account where I use ChatGPT to trade this. Okay, so I use ChatGPT signals to trade this challenge. I already passed phase 1, passed phase 2, blew the funded stage, and now this is a new challenge account. In phase 1, current equity 25.75. So yeah, looking to see what happens. Sell on UJ, buy on the SPX, buy on gold, or buy on silver. So far in the green. A1 Live, 25% off. Great prop firm. Haven't had issues so far, so I highly recommend you check them out. Joshua, hello. Did you cut your hair? I did on Monday. So you're the only one that noticed. My girlfriend noticed as well, but my whole family didn't even notice. My friends didn't notice. Just you and my girlfriend. So you have good eyes. Congrats, Kim. Crazy times. Why would you say crazy times? I mean, it doesn't look so crazy. Yes, what's happening with gold and silver? What's happening with gold and silver is a bit crazy, but just part of the markets. Maybe Bitcoin is crazy. Marco, your girlfriend told him. That's a good one. So maybe Bitcoin is crazy. I know people on Twitter are panicking maybe a little bit. This is a big crash, but it's just the crypto winter. that's just how things go in crypto. You know, you have these huge corrections, and I would personally say this is only the start. Don't shoot the messenger, but I think we can go down to 40, 35. It could happen, absolutely. You also have to ask who is buying at these levels. Michael Saylor, yes, he's buying, but he's a scammer. A Ponzi scheme artist, I would say, from my research. So the people that want to buy, that are looking for a bullish narrative, that's not currently present. The current narrative is Bitcoin is slow compared to the current bank transfers because banks got their stuff together and they kind of accelerated the whole process. So yes, people still use Bitcoin for transacting, but they use some other coins as well. Is Bitcoin the cool thing? No longer the cool thing. Most institutions hold a bit of Bitcoin. Trump was supposed to push Bitcoin to 250,000. We didn't get it. Trump family is heavily invested in Bitcoin. Most of them are scammers, just the truth. Trump is a cool guy, but he's mostly scamming people in the finance world, okay? So the lack of narrative is real. Also, you have quantum computing. People are scared. Could Bitcoin be hacked? Could it actually happen? I don't think so. But the fear is real. As long as the fear is real, you're going to get things selling off. If you have any requests that you want me to cover, breakdown on the chart, I still have 4 minutes. Put it in the comment section. I'm going to run through the rest of my list. So on the watch list, to summarize, I have the Nikkei, which is pushing higher. Great to see it. Love to see it. Aussie dollar pushing higher. I want to get a pullback to the 20 EMA. Gold starting to improve, but I still need a bullish edge finder. I still need a bullish edge finder. If we can't go bullish, I'm not going to be in. Google, for now, I'll remove it. For now, I'll remove it. I don't have the confidence. Again, I did more research. I did more reading. I don't like the current situation with the Nasdaq, with the S&P. They seem to be selling off. Unless the Nasdaq can go back above all-time highs, there may be a time for a correction. There may be a time for a pullback. Or there may be a time for flat price action in the tech world. And the pound Aussie, I just added it. Love it. Looks great. What I love the most is that the Bank of England went dovish. They are starting to be more and more dovish, which should be bearish for the pound. And the RBA is, of course, hawkish. RBA is planning to hike rates, which creates a perfect divergence. Let's see. Nasdaq. Okay, Nasdaq. Aussie Swiss, CAD Yen, gold. Trump casually doubled his fortune in 1 year. Yeah, would you know? And most of his family is in crypto. So we're going to do the NAS quickly. I'm not going to touch the NASDAQ until we go back to all-time highs. That's my plan. We have the all-time highs. Unless we can break them, I don't want to play it. I don't want to touch it. Aussie Swiss. Let's take a look. AUD CHF. I like everything that has to do with the Aussie, if I'm being honest. So Aussie Swiss, Edge Finder, DCHF. It's probably going to be bullish, right? Bullish reading, which is awesome. Not bad, not bad. Although I don't know much about the Swiss. I would rather play the pound Aussie. So if I had to do something with the Aussie, and I want to do something with the Aussie, I would buy Aussie dollar and I would sell the pound Aussie. On the Swiss, I don't have a clear opinion. Let me check dollar Swiss. What's up with that? I mean, doesn't look so great. It fell through. What about UJ? UJ approaching the level. Come on, UJ. You can go up. You can go up to 160. give me an opportunity to sell. I'm expecting an intervention. This is definitely on the radar. Of course, I have an alert set. Let's remove it a bit lower. Every single stream, I move it a bit lower, but I'm waiting for 159 or 160 to sell because I think an intervention is very, very likely. CAD yen. That's going to be the last one because we have ran out of time. But you can catch me next week. I'll be streaming every single day. If you want to get my schedule, go to A1 Trading live stream schedule, and you'll find the exact time when I'm on. CAD yen, Edge Finder. What do we have? CAD JPY. Bullish reading right here on CAD yen. Respecting the 20 MA, that's good. CAD, I don't know much about it at this moment. The yen is definitely weak. No doubt about it. The yen is definitely weak. CAD yen, I'm not so sure. So technically it does look nice, but I don't have enough information on it to go in on a trade. If you want to play something with the yen, I would much rather do USD JPY, where I'm expecting the intervention. And if an intervention actually happens, you can expect this to go into the whole market. So the dollar is going to lose value all over the place. The yen is going to gain value all over the map. So be careful. Be very careful with the yen close to these levels. Very careful. So that's it from me. Good luck in the markets. I'll be giving away more DNA codes. You can catch me next week. I'll stream every single day. That's about it. Have a great weekend. See you. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.